50-minute order flow charts on screen? All right, I think they are. Am I audible? Am I coming across? There are lots and lots of important developments happening. Lots and lots of important developments happening. Am I coming across clean? Is my audio good? All right. So, lots of things to talk about, especially in terms of where the market is positioned and where are expected to do and expected to do before the end of March comes in, and we go into that series of April. Right. First and foremost, there have been some questions coming in about what we are looking to do from a larger time frame perspective, and we'll address that very, very quickly. But for all practical purposes, as derivatives traders, I have this saying and I'll repeat it again and again because we need to align on this. As derivative traders, we cannot be people who live too much into the future, and we cannot be people who are living in the past. And I'll repeat that again because it's important. As derivatives traders, we are not people who live too much into the future, and we are definitely not people who live in the past. We have to live in the current moment. And the current moment is what is on your screen at the moment. And the faster we reconcile to what is happening in the now, the faster we reconcile to what is happening in the present moment, the better we become as traders. Right? What a lot of traders do is they basically think too much into the future. They are talking about what can happen for the rest of the year 2025. They are talking about what can happen for the rest of the year 2026. They are talking about what happened in 2022, 2020, 21, 2014, 2008. They are living too much into the past, and that does not help us as derivative traders. As derivative traders, we have to be focused on the now, on the present moment, on what is happening in the moment. And because this is information which is leveraged data, this is information which is powered by a multiple of 75, like your Nifty futures, for example, that is powered 75 times more than a typical stock which you would buy, let's say a Reliance or an SPI or something. And because of this higher leverage, you cannot be living too much into the future. You cannot be talking in terms of what the market will be doing in November, December, when you need to be focused on what is happening in the month which is trading, which is the contract which is open, which is the CD which is open. So as a golden rule, and I've been saying this again and again, when we talk in terms of derivatives and we talk of ourselves as derivatives traders, we are focused on the current contract, which is the March future. And our bias, our view, is valid as long as that current contract is open. When the series changes, the view changes, the bias changes, right? So simply put, what will happen in April, I don't know what kind of volumes come in over the next 2 or 3 days, and then the volumes are going to dictate price action. And by volumes, I mean rollovers. Rollovers are traded quantities which are carried from one series to the next series, and there's never a guarantee that all the traded contracts go on to the next month's contract. In fact, the ratio is always about 55 to 65% only, right? So the remaining 30-35%, they are open to changing their biases, they're open to changing their views in the market. And because it is 55 to 65, and because it is not 100%, we cannot carry the same bias between series. So we were short in February, we went long in March, right? We have been long in March, does not mean we'll be long in April. When April comes, we'll take a review about all that has happened, and we'll make a fresh bias and we'll approach the series of April differently. I want you to understand that this is because of the kind of traded volumes which are there, and traded volumes are the movers of price action over here. Right, so this is where we are. We'll focus exactly on what is happening in the month of March futures. But for those of you who ask me, okay, what is a longer term perspective, I'll just spend a minute talking about the larger market profile chart over here, and we'll focus our attention on the Nifty. Just quick, okay, I wanted you to understand where we are in terms of the positioning of the market out over here. Just go to a market profile chart. So if you look at where this is, and I'll draw up the larger year, the 1 year contract. We spoke about this earlier in the month of Jan also. So this is that important level which was the POC of the entire year, where the largest trading concentration of volume was. So this region for me is around that 24,150, 24,100, 200 zone. Right? This is the larger view for the month of 20 for the year 2025. And we did speak about the year of 2025 as being a consolidated profile which has to fill in this zone. Right now, this is valid as long as this market stays below this 24,200 zone. I'm still expecting rotations and a fill up over here. So we went back, tested this HVN lower over here, and I did expect to get a test of that June lows over here, but that did not happen. But now we are testing out over here. And as a long only stock buyer, or somebody who wants to hold stocks for 6 months for 12 months or 2 years, you got to pay attention to this nifty spot profile because this is the cash market, right? And you got to be careful over here as the market stands at 24,000, 24,200, because this is what is the supply zone for the year 2025. And till the market convincingly trades above 24,200, the structure of the market is not in favor of buyers. This is the longer cycle, and I want you to be a little bit careful to understand this because this is a play between time frames. I'm still looking at the entire 2025 as a consolidating profile, as a market which is going to be within the highs and lows of the entire year of 2024. And I feel this is going to be the supply zone. Hence, that focus on 24,000, 24,200. The market is expected to meet responsive supply, responsive sellers over at this zone and come over here and start operating out over here, right? So overall, that view about 2025 being a consolidating profile still is there, despite what is happening in the month of March. I am not in a position to change my view unless the market proves me wrong and does a strong move about 24 in April or May, which is going to be similar to what we have seen in the month of March, right? If that happens, we change our view, we change our bias, and we have to stay above the profile of March, the entire month of March, and put off initiative buying over here, and that will force a lot of short covering also, okay, to happen. And then the market can think about, okay, going further up ahead to that 27,000 odd level. The market was talking about 26,200, I think was the all-time high. Once we get about 24,000, yeah, then we may look to cross that all-time high also, right? But that is subject to this market doing what it has done in the month of March for the entire month of April and the month of May. If that happens, we will start doing a review of it. But for now, we will be hitting supply, we will be hitting resistance, and as a long-term buyer, you need to be careful about this view going forward, right? So just stay focused on 24,000 for now. I've been saying this that this month of March is a little bit different how you would be looking at, say, a month of February or a month of April or a month of May. That view is still there. This is more okay driven by March and pressure. And for those of you who have been trading for a very long time, you all know that the month of March behaves a little bit differently, especially in the last 10 days, compared to what it does for the remaining months of the year, right? So this is where we are. We are at really highs, and the market is hitting that POC of the entire move of 2024. And this is a zone where if you have already built longs in the month of March, you need to start thinking in terms of taking profits and not adding fresh long positions, especially with the market around 23,900 or 24,000, because the risk reward over here is not worth it. Right? So we will review this when this series is over, and we'll tend to we'll take a look at it in terms of what this market is expected to do later in the month of April. We'll take it still a month at a time, and we'll see there are trading opportunities for us around that. This is where we are. And we spoke yesterday. Let me just, in fact, bring the spot chart back, daily profile, and we spoke yesterday about the low of that.